Hi there everyone, good afternoon. This is Closing Trades right here on ET Now. I'm Bandhan Bank and with me is Aisha Faridi. And you do have the markets that is seeing a leg up right now. So up a 0.5% or so for the frontline indices as we're holding out above the 18,100 mark. You've got the Sensex as well, which is up by about 370 odd points. The broader markets, which was just about finding its feet, now seems to be playing catch up. So the mid-cap index is up about a 0.5%. Yes, the breadth of the market that continues to remain weak, and we're eyeing a whole host of earnings that were doled out over the weekend and on Friday evening. And clearly, it seems to be banks in the spotlight. The likes of ICICI Bank, Kotak Bank, RBL, Bandhan Bank, Yes Bank, all in focus and reacting to their quarterly earnings. As I said, the underperformance in the broader market is evident, although the mid-cap index is now playing catch-up. The small-cap index sort of flitting between the green and the red. IT, you have the mid-cap IT names clearly seeing some traction playing out. So the likes of Coforge, Persistent, they're all in the spotlight. And cement, post-Ultratech's earnings, that entire sector continues to remain under a bit of pressure. That being said, for now, we're staring at a print of about 18,130 on the index. And apart from IT, there is support coming in from other quarters as well. So it's auto, pharma, even the Nifty Bank index is up about 340 odd points. In terms of some of the smart movers in today's trading session, then, that's largely being led by frontline IT as well. So Kotak Mahindra holding the top spot. There's something like Infi TCS in the green. Eicher Motors from the get-go has been a smart mover, and that stock continues to hold out. HUL, and then you've got the banks. So you've got something like a Kotak Bank up in the green. ICICI Bank as well in the spotlight, and you've got Axis Bank as well as we await the numbers. Ultratech down about 4% in trade. Grasim, JSW Steel as well. So for now, it's the frontliners, Aisha, that seem to be taking leadership.
Yes, they are. The breadth as well is holding out from the word go today. The market breadth, in fact, is, outperforming what the benchmarks are up to. A lot of newsmakers, there's a lot of earnings reactions as well coming in. And Yes Bank clearly being right on top. Not for the stock price. That has really been a plunge from the word go. Yes Bank continues to languish in trade. Of course, the provisions were elevated. They've gone up a good 45% on a sequential basis, and more importantly, it's the Bombay High Court order that Yes Bank had written down 81 bonds worth about 8,415 crore rupees, and multiple writ petitions have been filed challenging the write down. So that stock, of course, continues to languish, still down about 7.5% as we speak in trade. Bandhan Bank, that's the other one, though on the flip side, that's holding up a good 4%. We spoke with the management earlier today, and they're expecting overall a business momentum from the fourth quarter of FY23. Also, Aether Industries, another management we spoke to, the stock is holding up a good 5%. The revenues, of course, were higher by 19%. The EBITDA margin has seen an improvement of 200 basis points sequentially, and peak revenue potential from Facility 3 now stands at 200 crore rupees. So that's something that's definitely exciting the street. In fact, let's hear out from Aman Desai from Aether Industries, and he's saying that the company has several launches in the pipeline.
We are very upbeat and positive about this business model, as we always have been, and rightfully so. We have made a couple of announcements in this last quarter to this regard as well, and we will continue making a couple more announcements in the quarters to come. And so we are seeing a lot of inquiries come in. We are seeing actual inquiries being translated into revenues in a very speedy execution mode by multinational innovative customers across the industry spectrum. So very upbeat about our R&D pipeline. It's packed across all business models with various launches happening in the quarters to come. We are launching 5 new products in the upcoming greenfield manufacturing site in the next 3 months, and we have 3 further agrochemical advanced intermediates in the pipeline as well for an additional greenfield site.
All right, let's connect with Kushbora, Naresh Mirani as well, who are joining in on the charts. And Naresh, let's get in your take then as to what you make of the fact that IT, it's not just the frontliners, but across the board that you're seeing some traction picking up within this entire basket. Even take names like a Coforge, that spiked up about 5.5%, Persistent looking smart, Oracle Soft, for instance.
So the whole pack looks interesting. We've seen a 10-15% bounce in the large cap, but the smaller cap and the mid cap segment has seen a much deeper correction. And going forward, they could surprise on the upside. Even the stocks wherein we have had results, the price action has been more constructive than negative. So we've seen an intraday recovery in a LTI Mindtree or a LTTS, and LTI holding on after the results. So like this whole pack, in this my top favorite as of now would be Birla Soft and LTI Mindtree, which have seen a good correction. Coforge has already moved up a bit. But from here on, Birla Soft from 300, 303 could go to 330, 340 levels in the short term. LTI Mindtree could go towards 4600. So overall, the whole small cap IT names look interesting. I think the bounce could be as closer to 10% in the short term.
Okay, fair enough. That's the view coming in. But let's also run you through some of the stocks that are in the news. And actually, let's get in a view on the charts with those. And I just wanted to understand, Kush, Yes Bank, as we're seeing the stock that is reeling under pressure. You do have that 81 bond issue, and the provisions as well remain rather elevated on a sequential basis. Your view on the charts, and what's the assessment after looking at Bandhan Bank, because the management as well has been pretty optimistic about growth momentum continuing.
Yes Bank again, it's been a darling of I would dare I say small retail traders who'd want to get into a penny stock, not really penny stock but a smaller ticket size stock, right? And we did see some kind of traction in that. Wasn't able to hold. In all honesty, I wouldn't touch this with a barge pole. There is a lot of selling pressure that is there in the stock. There is a lot of selling overhang that is there in the stock. At best, it could be trading bets, with small, with small spurts, here and there. But otherwise, I wouldn't really be interested in this, quite a lot. If anyone has an existing position, my suggestion would be 16 rupees to 17. 16 to 17 is where there is a strong buying zone for this stock. We've seen the stock break out from those levels, take support at those levels and rebound. So that is where I would place my stop loss if I have an existing position. Otherwise, there are plenty of other fish in the sea, and there are a lot of stocks doing well. I wouldn't really venture into this one. As far as Bandhan Bank goes, we are seeing a very clear breakout today on the back of very decent volumes. The stock was in a consolidation range for the last few sessions, but today we're getting to see a range breakout. But still, 250 is something that the stock hasn't been able to cross for the last month or so. So I'd probably be taking some profits home. If I have an existing position. If someone wants to ride this, I would suggest 244 is a good trailing stop loss to have. If the stock closes above 250, then there's a very clear run that the stock could make to 265 levels. So I wouldn't recommend a fresh entry here, but an existing position with a trailing stop loss, why not?
Since we're on the subject of Bandhan Bank as well as Yes Bank, and we were talking about Yes Bank, what is the worst impact of the Bombay High Court ruling on Yes Bank? While you are seeing the stock tank quite a fair bit, Yes Bank is the stock that I'm talking about, has been gapped down from the word go and hasn't seen any material recovery coming in. We asked the management about this, and here's what they had to tell us.
So first thing, I think we have the legal opinions which gives us very, very strong grounds to challenge this decision before the Honorable Supreme Court, and that we are going to do. We are having 6 weeks to make an appeal in the Supreme Court. That is one part. The second thing in your question in terms of what could be the worst case scenario, first I would like to explain the terms and conditions of these instruments, which are the 81 bonds. First, these are the perpetual bonds. And this is the discretion of the bank whether to exercise the call option or not. So they are the perpetual, okay? So it means they can continue in our books forever. That is one part. Second, again, as per the terms and conditions of these instruments, again, this is the discretion of the bank to pay the interest or not, except.
All right, moving right on then, that was the management of Yes Bank, but let's also focus in then in the spotlight on Bandhan Bank, as the last tranche of the restructuring was done in the last quarter. This is according to Chandrasekhar Ghosh, who's the Managing Director and CEO. Let's listen into what he had to say regarding the bank's provisioning.
Then faced on that the pandemic, and that time restructured, we have been done in the 8,000 crores. Though customer has paid in a 1/3 of that, but other amount also helped me that to account for on that. So in that sense, in the last tranche of the restructure loan, we are booked as a NPA in the last quarter. So that we have been making the little bit higher NPA, higher provision. And it is I feel that my experience and all the books are showing on that. It is a last point on that has coming this.
Okay, with so many earnings already done with and in the bag, it's largely been an as expected report card. But a few, of course, have managed to beat the estimates as well, or for that matter, gravely disappointed the street as well. Somit is here to get us a roundup of all the earnings so far. Somit?
Well, among the Nifty companies, if you see, so far 15 of them have reported earnings and only 3 of them have reported a number which were ahead of what the street was expecting. 10 of them have reported pretty much in line set of numbers, while only 2 companies have so far missed their earnings compared to analyst estimates. And how have been the analyst changes or the revised in target prices? Firstly, if you see for Asian Paints, after reporting a weak set of numbers, the company's outlook for the fourth quarter was also weak, and thus we have seen a 7% cut in the consensus target price post the results have been announced by the company. For Kotak Mahindra Bank, Reliance Industries, Infosys and HUL, the analyst estimates have remained largely unchanged post the results were announced. And on the upgrade side, it was JSW Steel, which has seen an upgrade of around 6% when it comes to their consensus target price. But do remember, JSW Steel's Q3 numbers were pretty much in line with what the street was expecting. However, the upgrades have come in because steel prices have continued to rise recently, if you see. Other than that, IndusInd Bank and HDFC Bank have seen an upgrade in the target price in the range of around 3 to 4%, while HCL Tech and HDFC Life's insurance target price have increased by only 2 to 3% post both the companies have reported their earnings.
That's interesting. Thanks very much, Somit, for putting those details into perspective. Let's connect with Pashupati Advani as well, who joins in on the show. Hi there, Pashupati. Out of the earnings that have been reported so far, it seems that majority are in line with street expectations. Given that, we had a bulk of the bank's earnings coming out over the weekend, what has been your key assessment of the big numbers that have been declared so far?
Well, I think in line with the expectation is fine, but I think the expectations are a little softer than I would have thought. And it doesn't, I know that we're going into the budget next week, and I therefore feel that the market is reasonably buoyant, but it doesn't feel like it. I mean, that's my personal take. So some of the earnings that have come out have been okay. Some of them have been, weak. So, I mean, it's a tough call. And I think that, all is a bit of a push, I think, according to me, even though all the banks seem to have pushed their earnings out.
What's your take then, in specific on what we've seen within the entire IT basket, the kind of numbers that have come out in terms of mid-cap IT as well? In particular, you have, for instance, a Coforge. There was a guidance upgrade coming in. There was a guidance cut for L&T Tech. We've seen a margin recovery for the likes of LTI Mindtree. Has there anything in particular within mid-cap IT that has stood out?
Well, I personally am not so bullish on IT generally. You're seeing this new wave of chat GPT. I think that's going to change IT in a big way, and it's certainly going to change a lot of certainly in the way that business is done. And the problem that we are facing is that all our companies are trading at huge multiples, and I think that's the big issue that we're facing. So when the multiples are high, there's only one way to go, which is downward. So as I said, I'm not particularly bullish about IT.
I see, Pashupati, you also hooked on to Chat GPT. It's quite the, addiction, if I can call it that, really. Yeah, no, you can spend hours on it. But anyway, that aside, Pashupati, what is it that you're making of, cases like a Yes Bank, for instance? A, the pressure that you're seeing on the numbers, and B, to add to that, this entire new challenge, which is the Bombay High Court now disallowing the write-down of 8,400 crore rupees of 81 bonds.
Well, the thing about Yes Bank is it was a special case. It was taken over when it was in a mess. SBI took it over and is trying to make it a second bank. Like, you have Air India and Air India Express, you've got SBI and Yes Bank. So I think it's going to take time. This was a setback, obviously, because nobody was expecting, and the CEO of Yes Bank is obviously pounding his fist, saying, they have no right to say this. But let's see what happens when they go to the Supreme Court, because obviously they will have to go there to try and get any kind of lessening or reversal. But Yes Bank's also had a nice run up from like 14, 15 to 19 and change, actually over 20 before this news. So I think it's got the backing of SBI. It's got cheap deposits, so I think it's here to stay. And we're seeing this in other banks which have been turnarounds, like RBL, which has gone from double digits to around just under 170, gone up to 190 and come back down again. And of course, the traditional frontline banks which are doing very well.
Since we're on the subject of banks, let me take it across to Harsh as well to summarize how the banking earnings so far have been.
In terms of advances and deposits, we're seeing very strong growth in advances, as has been the case in the system as well. And deposits, there are some banks which are doing really well, and there are some banks which are, I would say they are tepid at the moment in terms of their deposits. HDFC Bank, 20% growth on both sides, very impressive. Let's look at ICICI, 20% growth in advances, but a 10.5% growth in terms of their deposits. So keep an eye out on that. Kotak as well, deposit growth lagging advances by quite a bit. So is IndusInd. We're looking at Federal Bank as well, which is lagging. But Bandhan, on the other hand, has seen very strong growth in terms of their deposits and not so much in terms of their advances. So it's the reverse happening there. So is the case with Yes Bank. RBL Bank, a good balance on both sides, 15% advances, 11% on deposits. And IDFC First, extremely strong growth in deposits, 44%, really muscling through on that deposit front. In terms of the commentary itself, couple of key pieces of commentary. One is that loan growth continues to be robust, and here I'm only taken maybe the top 3 or 4 private banks. In terms of HDFC and Kotak, there is some sense or some commentary that there is some amount of mispricing which is happening in certain corporates. So keep your eye out on that. HDFC Bank grew branches extremely strongly. In terms of margins, Kotak is suggesting that they're going to continue to hold up. MFI, Agri and SME momentum for Kotak has been extremely strong, and they are pushing across unsecured loans as well. In terms of retail, SME and business banking, ICICI Bank is showing robust growth. Capex activity, according to them, is picking up. Government sector is doing well, and they believe loan growth is going to continue to remain healthy. So that's largely the highlight of the banking pack.
Right. Okay, Harsh, we'll take it up from there. Pashupati, just wondering, what is it that you're doing with banks? And, the larger ones here is what I want to talk about. The performance from a Kotak, the performance from an ICICI Bank. We're awaiting Axis's numbers. I mean, it more and more seems like that the skew has turned towards either PSBs or the more bottom-up stories which haven't participated in the 2022 move in banks. So an ICICI Bank definitely is not going to give you that alpha. It may be a Kotak or an Axis.
Well, I hate to be flippant, but what I'm actually doing is moving deposits and putting FDs, because I think the FD rates are, at 7+ are quite attractive, and it's certainly something to look for. You're seeing it in movement of mutual funds, also from equity mutual funds to fixed income mutual funds, and you're seeing it definitely in the deposit space, where people are actually taking money out of savings accounts and moving them into FDs and putting, 2-year FDs. So I think that's why you're seeing it, and obviously people are very comfortable with HDFC Bank. ICICI Bank, the deposit base is a little bit, I would say, more fair weather, so that's why they're having difficulties. The others are average, as you're showing. So I think that's one thing. But on the share market side, obviously, if people are coming back, they're coming back to quality. FIs have been selling, FPIs have been selling, and I think we're seeing some selling in all the top-rung banks. So maybe it's time to, I'm personally not very happy about the banking sector, but I think there's a lag effect, and certainly it's 20-odd% of the index, so it's here to stay. But I think that, this time next year, I think we'll be at similar kind of levels. That's my thought. Aisha?
Right. Okay, Pashupati, hang in there. Lots more to talk about.
Welcome back. Still tuned into Closing Trades. I just want to revisit Ultratech Cement, because do remember the management did speak about how there has been pricing that has come under pressure, and that is leading to the stock that's reeling under pressure now with the lowest point of the trading day. That's Ultratech Cement, which is the top drag as well on the frontline index. I just want to check in on some of the other cement names and see whether the ripple effect is playing out. So pull up the likes of an ACC, as well as something like a Grasim, Madras Cement, JK Lakshmi Cement, some of the other mid-cap names as well, and it does seem that it is a bit across the board. But let's find out those closing trades from our chartists. And Kush, your bet?
So my pick would be GNA Axle. This is a stock that we've discussed in the past and has done fairly well. Just came down with the market pressure, but otherwise no harm done. The stock took support around its 20-day moving average and has rebounded. So continue to remain a buy on this. 740 is my target on this. 700 would be my immediate stop loss.
Right,
Okay.
Naresh, what about your strategies?
So that would be a buy on Birla Soft. The stock has corrected almost 50% from the top. So from 580, it went all the way down to 270. Made a comeback to 340. And for the last 2 weeks, again, after that dip has been in a very tight range of 285 to 300. Today, it has crossed above the 300 mark, expecting this to go towards the 330, 340 mark in the short term. Would keep a stop loss at 296.
Okay, those are some closing ideas coming in from my experts, trades that they're executing right now. But as we get closer to the union budget, 9 days from now, let's take a step back and look at how markets in the past have reacted to the union budgets. Vinny is here with that analysis. Vinny?
Absolutely, union budget is actually one of the important triggers that comes in for the market as well. And when you look at the market, we've compared, gotten the data for a Nifty 10-day move just before the budget coming in. When you look at it, almost in the last 10 years, we have had 11 budgets. So in 8 out of those 11 budgets, we have seen a downfall coming in the market. Just 10 days before the budget, only 3 times the market has managed to stay in the green. Now, obviously in the last 3 years, when you look at it, we have seen a sharp fall coming in the market just before the budget. When you look at the after chart, except for last year, the before 2 years, we've seen a green coming in for that as well. The markets have managed to see an up move coming in those years, that is 20 and 2021 as well, except for Feb 2022, when we saw the market fall despite the fall before the budget as well. Now, after the budget also, when you compare the 10-day move coming in, we've seen, in those 11 budgets, 3 times the market has actually seen a fall. The other 8 times the market has managed to see a rise coming in as well. Now, look at it on the day of the budget as well. Look at how the Nifty has moved as well. When you compare the Nifty in, from 2018, we are comparing the charts. 2018, 2019, the July 2019 time, we saw the markets had actually seen a fall coming in. Other than that, in 2020 also, the markets actually saw a fall coming in on the day of the Nifty as well. So there is obviously volatility coming in there as well. And actually, when you compare it with the mid-cap, small-cap space, seems like the mid-cap, small-cap space was almost in tandem, but some of the times have underperformed the markets as well, like the Nifty benchmark indices as well. So that is a factor that one should keep an eye out on as well. Then a slight bit of an underperformance, marginal underperformance was seen in the mid-cap and the small-cap space as well. And obviously, during the day, when you look at it, the budget day, volatility that is coming in as well. Look at the points that we are seeing coming in. High volatility is what we've seen coming in over the years as well. Feb 2017 to now, it's always been ranging between 200 points to 300 and 400 points approximately. Only Feb 21 was the time when we had seen a sharp volatility coming in the market day as well, around 675 points. But this time around, Nifty as of now, is just up by almost 0.1% in trade as of now, comparing the month of Jan as well as of now. So now these 10 days are going to be important to see where they're moving, what is the trend that they're going to picking up as well.
Is going to be critical. Thanks very much, Vinny, for putting all of those details into perspective. That's a correlation as to how the markets have fared during the union budget. But Pashupati, your thoughts on Reliance Industries post its numbers? It clearly seems that the O2C business, ENP, that has driven the beat. It's been a bit of a disappointment when it comes to Jio. ARPUs as well have been quite soft. Retail was relatively strong. Your views on the earnings?
I think Reliance is benefiting from the fact that the country is buying Russian oil, and they are also getting their share of that. And that's, the refining business has always been the blue chip part of the business, and it's been the driver for the other two. Regarding ARPUs, I think we're getting gradual increase in rates, so I think that's helping, and that's a slightly longer term effect, but I think that will do well. And regarding retail, it's been good. I think that it will continue to be decent, and plus Reliance has gone into online in a big way, and they're buying other businesses that are synergistic with its retail. So Reliance has always been the stock to have as a mainstay of your portfolio, and I think that it actually benefits when they split into 3, which I guess they will do in the next 12 months. If I was to bet, I would say it's probably going to be this December on Dhirubhai Uncle's birthday. So I think that's what it is. Regarding the budget, I think it's going to be a friendly budget because this is the last one really before the 24 elections that's going to have any kind of effect. So hopefully the basic exemptions will go up because inflation has been there in India, and it's certainly a lot more expensive to live. So hopefully that will help. And I think that there should be smiles after February 1st, after Madam stops speaking.
Okay, quite interesting takeaways there, especially the one on Reliance, Pashupati. But great to have you on the show as always.
Thank you.
Thanks. Okay, that's the take coming in from Pashupati Advani. Quickly revisit what the market is up to. Still latching on to its gains. Also, it's ebbed off a little bit from the top of today. But a 0.5% uptick is, I don't think, any reason to complain. 18,140 on the future stays put, and the breath holds out well in favor of the advances. Okay, let's move on and let's give you a budget exclusive. Sources tell us that the government could consider increasing the income tax exemption limit in the union budget 9 days from now. Prakash Priyadarshi, my colleague, joins in with more details. Prakash?
Yes, we are getting from our sources that the government may brought in some required changes in income tax slab structure, and it is especially for the new tax slab. Sources are informing that these changes are being proposed, especially keeping in mind that the taxpayers are not adopting the new income tax slab as it was anticipated. However, Finance Ministry has not released the data as to how many taxpayers have adopted new tax slab. But the numbers are not as encouraging as is what anticipated. Keeping into consideration, the government is now considering to bring some, required changes in new tax slab. The first one is with regard to enhancing the income limit, which is exemption limit, which is on income, which is rupees 2.5 lakhs. It may be increased to rupees 3.5 lakhs. Also, if a taxpayer under the income bracket of 12.5 lakhs to 15 lakhs, he may get he may be that income tax category may be brought in under 20% slab. Government is considering to provide this benefit to the taxpayers to increase consumption, because remember, all the industry chambers have recommended government during a pre-budget consultation that the taxpayer should be given relief, especially at a time of high inflation, so that they could expand more and it will help economy to grow further. Taking all into consideration, government is considering this proposal, and required changes may be announced in the in upcoming budget.
Thanks very much for giving us those details. Let's connect with Anand Tandon as well, who joins in on the show. Hi there, Anand. We've got the upcoming budget as well as the expiry due this week. We're in the thick of the earnings season, and for now, it's 18,100 that seems to be holding out. Wanted to get in your take as to what you've made of some of the key earnings within the entire financial space, and is there anything that in particular stands out?
Well, the financial space has been reporting good numbers as was expected. I think we've been talking about expectations of banks doing exceedingly well, which they have done. The wealth management space, a couple of the results have come out that has done reasonably well. Insurance too has grown quite well, and insurance again, the current ongoing quarter is the year-end quarter, so that is another period where we would expect insurance numbers to come through fairly strongly. So overall, the financial space, I don't think there is much to complain about. If at all there are issues, it is outside based on export growth and so on in industries that are affected by that.
Anand, how critical will the budget be this time around? Our colleague was just telling us that perhaps income tax exemption limit is going to be enhanced. Sure enough, it is going to be an election-flavored budget, if I can call it that. So that may be a possibility. But purely from a market perspective, how critical would it be? And is the market anticipating anything on LTCG?
Well, the budget's important has been going down because of two factors. One, with GST, at least that those rates have got stabilized. So now there are only a few items that are under excise. And custom changes, tariffs, etc., the government makes throughout the years. So with somewhat a longer term view in terms of corporate taxes as well as personal income tax, GST coming in and stabilizing the rates, there isn't too much that you expect in terms of tariff changes. So this need for making changes every year in terms of slabs and so on, I think is something that the government should refrain from doing. That said, if there is an increase in the income tax slabs which are exempted, you would expect to see that can fuel some amount of spend, especially in the medium level, and that could, for example, sustain demand for real estate, and from there for most of the consumer durables, something that that may have peaked out sometime maybe in another 6 months or so.
Right. Let's put the spotlight then on auto major Maruti, which is set to declare its Q3 numbers. Margins are expected to surpass the 9.5% mark after 2 years, and volumes could increase on a year-on-year basis. Srishti joins in with the details as to what to expect. Srishti?
Well, for Maruti Suzuki this time around, firstly, let's have a look at how the volumes played up in Q3 FY23. So the volumes were down on a sequential basis. They were down around 10%, but a good jump on a YOY basis. And that's exactly what we are expecting onto the number front, because all the headline numbers will show a growth on a YOY basis, but a decline on sequential basis is what we are expecting. Firstly, onto the top line, not just the volumes were down, there were chip shortages, but on the flip side, a richer product mix is something that will aid the numbers. And all in all, we are expecting a decline of 9.5% on the revenue front at 27,162 crores is our estimate. The EBITDA is expected to decline by 4.5% at 2,647 crores is our expectation. And let's talk about the margin front. We are expecting a number of 9.7%, and if the company reports a margin above 9.5%, that number you will see exactly after 2 years. A 40 bips expansion on a sequential basis is what we are expecting, purely on the back of the cool off in the RM cost inflation, and on the flip side, a lagged impact of the yen depreciation against INR. And lastly, let's talk about the profit figure. A drop of 9.5% on YOY basis is what we are expecting at 1,873 crores is our expectation. But barring the numbers, we'll also look out for the management commentary on the outlook on the sales figure, the latest sales number from Jimny and Fronx, because we are getting to know that 1,000 per day booking is what the company is getting for Jimny. So we'll have more clarity on that, and also onto the demand outlook is what we'll be looking out from the management front.
Right, we leave it at that, Srishti. And Axis Bank is going to be reporting its numbers today. So let me take it across to Harsh, find out what to expect.
Well, yes, Axis Bank set to declare its Q3 numbers, and we're expecting net interest income to come in at 11,000 crore. That's an expansion of 27% when I'm looking at it year on year. Very healthy expansion there on the back of course, improving NIMs. That's been the story. Operating profit coming in or expected to come in at 8,400 crore. That's also going to expand 36%. Of course, elevated OPEX also in the last year. Currently, that OPEX seems to be tapering, and provisions are expected at 900 crore versus the 550 crore number that came in Q2. So provisions will start to normalize going forward. PAT is expected around the 5,500 crore mark. That's a 52% jump on a year-on-year basis. NPA is expected largely flat. NIMs are expected to go above the 4% mark. That's typically been the guidance. And in terms of the balance sheet growth, on both sides of the balance sheet, healthy growth, 15% growth expected on the advances side. That's again a 5% uptick on a quarter-on-quarter basis, so definitely a plus there. Deposits at around 8.5 lakh crore expected, again 5% expansion on the deposit side as well, 10% on a year-on-year basis. CASA is expected to grow by 15% year-on-year. Now, of course, margin trajectory and growth guidance are going to be the two key things to track with regard to management commentary. Also, OPEX growth. Keep an eye out on that number going forward, and credit costs and slippages as they try to expand their MSME portfolio. Business growth on the MSME side will also be the key, and of course Bharat Banking will, and some commentary around that will of course be useful as well.
All right, thanks very much for giving us those details. Watching out for Axis Bank numbers later today. 9:34, the stock has recovered from the low point of the trading session. Moving right on then, what are some of the key triggers that are impacting the cement sector? As I flagged off, Ultratech came out with their commentary saying that there is a bit of softening in the pricing. Let's take it across to my colleague Mansi, who joins in with the latest. Mansi?
Cement sector witnessed a major downfall in today's trade, and the sentiments did weaken after the cement major UltraTech Cement posted its results. And this sentiment, the weaker sentiments for the entire sector are here to stay. If we have a look at the realizations front, flattish realization can act as a disappointing factor for the entire sector. At the same time, large margin compression is expected for the companies. Analyst report and recommendations suggest that for the entire quarter, cement companies might see a margin compression of around 513 basis points and a downtrend in the profits of around 40%. So clearly the profits might see a declining trend for the entire cement sector, and the margins will also see a compression. At the same time, continued weak pricing power despite recent demand uptick is still a concern, because demand is intact, but the pricing strategy for the cement companies, it's still not clear. So clearly we did see the UltraTech Cement results, which were actually on a weaker side if we have a look at the margins and the profit front, and that was a sentiment, or maybe we can say that the negative sentiment started building in for the entire sector, and since then the cement sector was witnessing a downtrend.
Yes, it has been, right? Cement, and I guess, Anand, one can feel the heat today on UltraTech. That's down about almost 5% in the future. Same can be said about a JK, Dalmia Bharat, etc. But how would you look at this dip in, the stocks today? Opportunity to buy in because of the large infra capex, the real estate boom which is taking place. Cement surely is going to be one key component, right?
Certainly, cement demand is going to grow, but then so is supply. Unfortunately, for some reason, the market refuses to look at the supply growth, despite the fact that most of the companies are operating at or around 70% capacity utilization, at which level they will not be making huge amounts of money. They continue to trade at a phenomenal valuation on the assumption that the consolidation in the industry will continue and somehow demand will catch up with supply. The reality is almost all the major companies are continuously expanding capacity. So if you really have to take a bet on cement, I would argue you should be looking for takeover candidates, because it is quite possible that the consolidation in the industry will continue. And since limestone is becoming more and more difficult to source, most of the limestone is already allocated to existing cement facilities. So those companies which are either not expanding or are small are likely takeover candidates. So I would assume that that's the best way to play the sector right now. Otherwise, it is still quite expensive.
Then Nykaa, that stock continues to languish in today's trading session yet again as it hits that 52-week low. Wanted to know, or life low rather, for the stock. And Anand, what are your thoughts on the kind of issues that have been plaguing the likes of Nykaa, a lot of these new age tech companies? Would there be any sort of a silver lining or any advice to investors who burnt their fingers here?
Well, certainly there will be a price at which some of these companies become, worth looking at, especially a company like Nykaa, which has a real business. But you have to remember that these were all zero interest companies, in the sense that the money was coming in from countries where the interest was either negative or near zero, and therefore almost any opportunity in terms of growth was being overpriced. What we are seeing now is simply a correction for that excesses. Many of the companies have not done themselves great favors by resorting to accounting jugglery, some of which is coming out now. They have expanded into areas where there is no particular advantage that they have on a sustainable basis other than low cost of capital. So I think there is still some steam left before, some more downside left before many of these companies will actually look to be more stable. And I think the stability also should be achieved at numbers which are far lower, because you have to look at the numbers that they are making in terms of earnings before you decide that you want to give them more money. So the basic theme is that cash is not going to be free. Money is going to be somewhat scarcer and more pricey. And therefore, you have to look for near-term earnings rather than far distant earnings in terms of valuations.
Your view on the charts when it comes to cement stocks like Shree Cement, UltraTech, Ambuja and Grasim? Naresh, that was for you. Charts of cement stocks?
So technically what we've seen today is a total reversal for UltraTech, which almost came close to a breakout, gave a breakout about that 7200 mark, moved up a bit, and we are now well below the recent swing lows, which have been holding on for the last two 2 months almost. So 6850, 6900 below, that's the short-term breakdown. Same is the case with an Ambuja Cements, which is about to give that breakdown below the 490 mark, which was the low for the last almost 4 months. So technically, if you look at the whole pack, it looks like a short-term top is in place. Until the time we don't cross those levels, it could be a slow drift downward. So would avoid the whole pack as of now. Today's price action is bad, and in terms of volumes also, there are very high volumes on the downside. So as of now, would avoid the whole large cap cement space.
Some BTST trades as well going on that note. Kush, what's on your list?
So, I've got Cholamandalam Finance and Bata India. Let's begin with Cholamandalam Finance. The stock has actually turned around and shown quite a bit of strength. We are seeing follow-up buying in this for the last couple of sessions. So this remains a buy. 725 is my target. 709 is my stop loss. The second pick, as I said, is Bata India. The stock has been bearing the brunt of or rather slipping down quite drastically. But now there are signs of a recovery. The stock has looks like it's made an intermediate bottom at around 1550 levels, and there's a very clear positive divergence on the chart. So I would suggest this could turn out to be quite a pick. 1590 is my immediate target on this. 1565 is where I would place my stop loss.
Right, Naresh, what about your BTST trades?
So that would be a buy on Birlasoft, the stock in the IT pack, which looks interesting. A base is done, a stop loss at 300 and a target price of 315. Second is a buy on ONGC, which is at a good breakout. Expect this momentum to continue over the next couple of sessions. The stop loss at 150 and a target price of 158.
Okay, meantime, let's just look at some of the other stocks then within the broader markets. Apart from cement, there's select metal names like NMDC, JSW Steel, Tata Steel as well that are a little lagging in today's trading session. Kush, your view on the charts?
Well, not too bad on the charts. I mean, there's been a bit of a pressure, yes, but otherwise, these stocks are coming after a very, out of a very long slump. So for me, these are still very much a buy. Until the 20-day moving average or the key supports are broken on some of them, I would continue to remain a buyer on these on dips. Something like a Tata Steel is where I have my views. Where about 120 to 118 is the zone where it's a good accumulation zone. If you get the stock at around those levels, the payoff ratio will be excellent. But here too, if you want to enter, doesn't look like too much of a worry. 126 is my first target, 130 is my second target, 117 is where I would place my stop loss. So all in all, there isn't too much to worry about the metal pack just yet. Couple of days of down move is just more like a profit booking after the kind of steep run up that we've seen.
Anand, what about concerns of high inflation, the overall consumption trend waning to a certain extent, volume growth being impacted? How are you looking at those worries when it comes to FMCG?
Well, FMCG generally is likely to do well if there is an inflationary situation, because that is one place where you can raise rates, especially for those which have strong brands. Levers, for example, has reported reasonably decent profit numbers. And the problem with some of these foreign companies is that, whenever they start to make more money, they will increase royalties, which is what they have done now with their parent. So that kind of puts a bit of a dampener, and consequently, you may want to look at the domestic players. But clearly, you are looking for companies in FMCG which are perhaps now focused on rural India, because that is where the uptake is likely to be rather than the urban place, and therefore companies like Dabur, etc., may be actually something that one could be looking at, leaving aside valuation issues in some of these companies. So broadly, I think FMCG, especially if some of the commodity prices were to come down as the markets are seemingly expecting because of at least inflation not rising very much further from here, then you will automatically get a margin increase coming in from here, and also an uptake, as I said, likely in rural demand.
Okay, quite a few earnings as well, and you've got Tata Motors, which will be delivering its numbers this week. Of course, this week you've got not just the penultimate week to the budget come next week, but it's a truncated week as well. Remember, 26th is a trading holiday, that's Thursday. And then the expiry as well, the monthly expiry, that as well to price in. And this is definitely going to be one of those series when you've seen excruciating sell-off by FIIs. Already year to date, we're sitting at almost a quantum hitting about 1.5 to 1.8 odd billion dollars of selling coming in from them already. Yes, of course, it's come at a cost of outperformance from some of the other completely oversold markets like Hong Kong, China, which have seen a very, very steep recovery. Some of the other emerging markets as well have been quite on the recovering trend. But so be it, our markets have seen the brunt of FII selling so far. So let's see, excuse me, which way the market heads from here. 3 minutes left to go before we wind up for the day. Anand, we let you go on that note. Naresh, just looking at the market structure right now, just a nifty call for the near term. What does it feel like? Which way are we going to head, or this quiet range-bound consolidation would continue, you think?
I think given that we have an event in terms of the budget, we are not seeing a follow-on move which is happening across the world in terms of momentum also. So I think we continue in this range. Tough to cross 18,250, tough to break 17,800. For now, I think 18,000 to 17,950 should act as a support going into the budget. So for now, time for more range-bound moves. Also, the volumes on the cash segment are much, much lower than what you would generally see. So that indicates that we are waiting for the event to get over. So the viewers will only see reactions to the results for the next 4 or 5 sessions till the budget.
All right, let's wind it down then and wrap up the markets for you. And it's turning out to be a fairly decent day. On the upside, we've gained about 0.5% for the frontline index. So holding our head above the 18,100 mark in today's trade. And within the broader market, you haven't quite seen that follow through. So yes, it's a gain of about 0.5% for the mid-cap index, but small caps faltering behind. IT, FMCG, pharma, auto, and even banks gain. On the flip side, commodities, real estate, and infrastructure, well, they sit it out completely. Take you through the top gainers: HUL, Sun Pharma, Kotak Mahindra, UPL, Bajaj Auto, while on the flip side, Ultratech, Grasim, Adani Ports, L&T lose out. A whole host of newsmakers, so let's get started. Reliance Industries reacts to its quarterly performance. Do you remember the net subscriber addition has been disappointing for Jio? It was a core business that was heartening. 24.28 is where the stock wraps up. You've got Yes Bank. Remember, they've written down 81 bonds of 8,500 crore rupees. They're going to have multiple writ petitions challenging this, and the bank will be appealing to the Supreme Court. The stock under pressure. Kotak Bank, you've got the NII growth up 30%. ICICI Bank reacting to its numbers. Street waiting by for Axis Bank. We're expecting profits higher by 52%. Ultratech Cement, clearly, while the profits and margins came in as expected, the company has flagged off pricing concerns and cost pressures, and that has taken down with it the entire cement basket, ACC, Grasim, the entire space as a whole under pressure. JSW Steel, margins have come in higher. Bandhan Bank, the gross advances are up about 11%. Their numbers today, you had something like a Route Mobile, which came out with their numbers, pretty healthy revenue growth. Maharashtra Seamless, an earnings growth of about 65% on the PAT. IDBI Bank, Karur Vaisya Bank reacting to its numbers, provisions a bit elevated. Adani Green came out with its earnings. Canara Bank as well, where the provisions are a bit lower on a QOQ basis. IDFC First came out with numbers as well. You also have something like an IEX, where the profits are down about 4%. Meantime, within the broader universe as well, just identifying some of the movers and shakers. Torrent Power surges a solid 6.5%. Mid-cap IT in the spotlight, so the likes of a Coforge, Persistent, Tata Elxsi, they're all a buzz. Canfin Homes gains, AU Small, Gale, GSPL, L&T Tech, GNFC. While on the flip side, Yes Bank, of course, a big drag. Shree Cement, JK Tyre, Atul, Dalmia Bharat, India Cements, PI Industries. Those are some of the stocks that are under pressure. Come tomorrow, the street will be watching out for Maruti Suzuki as well as TVS Motor, Bharti Infra and Granules. With that, we're completely timed out on the show. Thanks for watching.